Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Varilek, seeing some mixed trade early on in the grains as well as the livestock futures. Cattle to the plus side making new contract highs, though, while we had a gap lower opening in the hogs. And let's start off talking about cattle, Scott, because new contract highs and both live cattle and feeder cattle futures, and of course, live cattle chasing this very strong cash trade that we saw yesterday.
Yeah, thanks for having me. And cattle market feels great, solid
Right.
ground. We had a nice cash rally this week that, we've had the ability, and the show list tight enough to know we can ask for some higher prices in the north, and we're indeed getting it. And it turned into a little bit of an auction this week again, where it started at 180 and you already feel good about that. And then it goes to 181, 182, 183 by the end of the day. It seemed like every half hour we were getting packers jumping over each other trying to get cattle. You might have had them priced somewhere, and then a packer says, I got to see if I can get it. By the time they called back, they were already gone, got that price. Everybody else was already there. So then they had to jump again. And there's some quick turnarounds, cattle that are being sold that need to go yet, this week. So it is a quick turnaround. Packers seem to be short, really close to the knife. So we have that leverage if we know how to use it. The North is doing a great job trying to ask for some higher prices. And now today there's going to be some goals trying to get 185, not out of line. We are in this situation. Good question. They've bought enough now. I wonder if they don't try to hold off. You might get it late on a Friday afternoon. The guy that holds out the longest might get a little bit of a price saying, okay, now I won't affect the market that much, so I need a few more. So we know the packer needs the cattle. It all depends on how high they want to let it go. The thing holding us back is the South, not trading enough cash, not able to ask for some higher prices. I mean, it started the week at 170 and a little 171.
Right.
And when the Packers are out on a Monday and a Tuesday in this kind of market, they're usually looking for some low-hanging fruit just to see if they can get a guy trip up and try to sell some. So some of them early week sales are just too low. And when they're out that hard in the beginning of the week, it's a great sign for us.
So, as you say, Packers close to the knife. We have tight supplies, but are we also seeing a function of still strong demand? I mean, we still have choice boxes over $300.
Demand is holding on strong. I guess I'm led to believe that it's gonna stay that way for the time being. We're into this grilling season right now. We've still got several of the holiday weekends coming up. We're not to those dog days of summer. We're not there yet. I'm not even close. So I think the movement's going to stay on the excellent side. So not seeing any issues there. It's all got to keep that outside markets kind of in the side of your brain, just to know, okay, we got all this debt ceiling talk.
Yeah, I was going to ask you about that.
Dow Jones breaking, so we're really enjoying this high cash news right now in good demand. If we get done trading cash cattle for the week and that stops, I just hope the market doesn't turn its focus over to those outside market stories, because that's probably what was holding us back in the first place. So hoping that we can get through some of this negative outside news and turn that around, because then I think the feeders have more room to go. If we can put that behind us for the short term here, because I think that the demand is going to stay strong for those feeders, and we've not seen our highs yet.
Okay, so where do you project us to on feeders and even live cattle, since we're scoring new contract highs there as well?
Well, I'd be just kind of grabbing a number from thin air there, but I do think that the live cattle cash prices, we've not seen the high for the year yet. I still think we're going to get tighter and tighter. It's going to stay stronger than expected all summer, in my opinion. And then we get to the fourth quarter, we're on to the next calf crop as we get through this one, and it's just going to get tighter year over year. And we've not decided if it's going to rain yet for this winter to know if we're going to see a bunch of heifers being held back for the cow herd to decrease that cattle on feed supply. So I don't see it yet. I don't see the abundance of moisture saying that that's going to happen, which would just keep adding fuel to this fire if we start sending heifers to the feed yards again. So there's some lofty levels. I've mentioned it, everybody kind of wants to say, should I sell some feeders up here? And it feels like, yeah, I think that there's more room to the upside. And I always have to just grab a really high number just so everybody knows that I think it can happen.
I think you said 300 last week. That kind of grabbed
my attention. I did mention that. So, and that's in the realm of possibilities for sure.
So what about the hogs? As great as the cattle market looked this morning, hogs at gap lower opening into new contract lows. Is that a function of these cattle hog spreads again, or is that just we just have too much liquidation and concerns about demand?
We thought that spread, cattle hog spread, was lightening up. That news, they
Right.
seem to be trading opposite each other. Anytime the hogs are higher, it seems like that's when the cattle are lower. Cattle rally hard yesterday, and now the hogs down big again. So it could be adding a little bit of it to those markets, but I don't know if that's the whole story and the whole reason the hogs are going. We've had some decent fundamental news on the hogs. We've had some guys saying, I'm getting $90 bids, from some packers, looking for some hogs. So cash hogs, in some different little spots is good. And got a positive basis there, which is such a rarity for the hogs anyway. So, and then you got hogs 3 pounds, carcasses 3 pounds less than a year ago. So a few of those fundamental stories are okay, but the word fear seems to be the one that's being used a little bit, and I like that term. That's how it's trading. We gap lower today, and I think we're just going to start to see some more liquidation. You've got some outfits that are, have some barrows spoken for, and then loads of gilts start showing up that were planned to be replacements, and they're heading on feed. So we've not seen that. We're going to have to get through some of this liquidation numbers first before we get it tight enough to where it can turn around. And who knows when that's going to be. Wish we really had some more insight on it, but it just has not wanted to turn around or even try.
Corn market up 1 to 2 cents. We got above that double top area in the July corn futures yesterday. And of course, we are putting some weather premium in, it looks like. But is it too early to be concerned about the weather? And what about the poor exports that we saw this morning? Is that going to trump some of this weather rally?
Yeah, the poor exports, the weaker demand, that's been the tone of the market for a while. We're talking about our strong dollar, and we were going to plant big acres. So we, had a pretty significant correction to the downside. And now we sit here May 25. It's been in the back of our minds on how dry it was last year in some pretty good areas, but not so much in the Eastern Corn Belt. So I think we're just getting to that time where I got to start moving the weather patterns towards the front of my brain here, because I think it's going to start to matter. Because if we start to decide these forecasts look dry, and in the immediate here, we're dry through the rest of this week and into the beginning of next week with some pretty high temperatures. So not seeing any immediate relief coming up, I think that's going to start to pump into the market. We might have had a little weather premium built in, but I think that was just some more profit taking as we had a pretty good break already. And I don't think it was ready to just completely sweep the leg. And I don't think we have enough weather premium penciled into this market yet. So I'm going to start to say, okay, going to maybe take a few shots here and thinking this is low enough for a minute. We don't know. I mean, we've all been thinking this is a slam dunk, big crop coming. We're going to fill the pipeline, no problem. And now that you start to add some risk to it and say, okay, these forecasts are looking a little drier. We had some big rains move through, and then that was kind of the extent of it. It's really quieted down. So I think we've still got some weather premium to pump into it. I'm going to take a shot and stand on that for a little bit. If all of a sudden the forecast change, you won't find me married to any of this upside stuff.
Okay. And if corn takes off, you would think soybeans would follow, but so far soybeans have been pretty reluctant to really follow the corn market. We've got new lows going on in the soybean meal market. Do you think that's what's going on there, or is there something else that's kind of limiting the upside?
I think the soybean meal is a part of it. That was kind of a flagship for a while for the last few months, and that's kind of drying up. And you look at some of these long-term charts, and yes, I say we had a pretty big correction, but if you want to pull up some 10-year charts, we're still at some pretty good levels compared to what we have been at. So I think the market has to be aware of that yeah, we've broke a ways. It could break more. That is a possibility there. I think if the rain does turn on, then we're not done going down, but it probably needs to slow down here and then take a wait and see attitude to see if the weather's going to show up.
Well, that, and you still have this big Brazilian crop kind of overhanging the market. And, our exports have slowed just because they're much more competitive right now, price wise, right?
Yep, that's for sure. We've had the weaker demand talk in the beans. We've got a strong dollar, and South America, has increased their infrastructure in the last 5 years. China's pumped a lot of money into that economy. It used to be, late summer, you get to August, that's when their beans were hitting the market. I think they can get them out a lot faster now, and just the sheer size of it is getting bigger over the years too. So that's going to be a major factor.
All right. Thanks for joining us. Scott Varilek with Kooima Varilek, and that is Markets Now.